It's Tuesday, the 11th of October, 2022. Welcome to the Fast Five by Fear and Greed, where we give you the top 5 business stories you need to know about in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 big stories today, 5 minutes. Let's get into it. Story number 1, the Aussie dollar headed yesterday towards 63 US cents, the lowest level in 2.5 years, as investors deserted most currencies really except the US dollar. It is bad news for overseas travellers, but good news for economic growth.
That's right. The local unit is suffering because people expect interest rates in the US to go higher. Now, if you're an investor, you want a higher interest rate, so you head to the US, not Australia. Also, the greenback has the added and very significant benefit of being the safest currency in the world. When you have tension going on, North Korea, Taiwan, Russia, Ukraine, when you have the chance of a recession quite high in Europe, quite high in the UK, and probably pretty high in the US as well, people want to hold the US dollar. 6 months ago, the Aussie was trading around 76 US cents. In a couple of years before COVID, it was closer to 90 US cents. Now, there is a silver lining here because a weaker currency is good for the economy. Basically, our exports become cheaper, so people want more of them. Imports become more expensive, so rather than buying something from overseas, we buy local. That's the good news. Of course, it's bad news for anyone travelling overseas, particularly if they're going to the US, but even outside the US, the currency is starting to fall against the pound, for example. It's come off against the New Zealand dollar. It's actually appreciated against the euro, so maybe it's time to visit Italy or France. How far can it go? Well, the pessimists say it could go to 60 US cents if a full-blown recession hits. It really, it's had a couple of instances in the last 20 years, but really hasn't been down to that level since the early 2000s. Back then, it got as low as 49 US cents. Generally, over the past 20 years or so, it's been in the 70 to 75 US cent range.
All right, on to story number 2, and this is a bit worrying, Sean. The Financial Review's holding an energy and climate summit, right? And there's been some pretty confronting commentary, including that retail electricity prices could jump by 35% next year.
Yes, wholesale prices will surge as the system grapples with the transition to clean energy amid a global supply crisis. Now, Atlanta Energy's boss, Jeff Dimery, said tariffs would rise next year a minimum of 35%. He said Australia was out of time and needed to deal with the commercial reality of investing in new wind farms and hydropower. Origin CEO Frank Calabria basically agreed on that 35% figure. He said the key challenge for Australia was no longer ambition, but the existing system needs to operate reliably until new renewables infrastructure can be built. And they'll take honest conversations about what it will cost to build and how long it'll take.
And Sean, while we're on the subject of the cost of living, links perfectly into story number 3. Wholesale petrol prices have surged by more than 13 cents a litre in the past week.
That's on the back of much higher oil prices. CommSec estimates that the national average wholesale petrol price rose last week to 170.7 cents a litre. Given the gross retail margin for unleaded petrol is 15 to 20 cents a litre, CommSec chief economist James Craig reckons about $1.90 a litre will become a fair price for petrol. The average cost yesterday in the East Coast capitals was around $1.80 a litre, so it's going up. And of course, we have had the full fuel excise kicking in. Thing is, Mr. James reckons prices could well go north of that figure. In fact, they could go as high as $2.10, $2.15 a litre.
All right, story number 4. Aldi could be liable for millions of dollars in compensation after a federal court judge found the supermarket chain underpaid warehouse workers. Now, Sean, this one's interesting because a lot of people could actually identify with what's happening here.
That's right. Workers at a Sydney distribution centre were required to undertake a number of tasks before clocking on, including completing safety checks on forklifts, checking communication devices and undertaking a group warm-up activity, according to a report on AAP. Aldi said it wasn't underpaying its workers and that employees were only expected to be ready to begin work at the start of their rostered shifts. But Judge Douglas Humphreys said he was satisfied there was a clear implied direction that employees had to arrive early and undertake the tasks. He said there was no personal benefit to the employee in the activities carried out, but there was to the employer.
And finally, Sean, story number 5. The Saudi Arabian Sovereign Wealth Fund has committed more than $2 billion to new long-term football sponsorships.
Yeah, I just can't imagine the future fund throwing too much money at the Swannies or the Hockeyroos. But Saudi's Public Investment Fund said it had spent $2.3 billion, that's US dollars, in the first 8 months of this year. The fund has assets of more than $600 billion US dollars, according to the Financial Times. Its mandate is to pursue financial returns and also help develop the nation. Hence, it's investing in football. The public investment fund already owns Newcastle in the English Premier League. It's also got a commercial arrangement with Manchester City. Still, $2.3 billion in sponsorship in 8 months. Not bad.
All right, that's it. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 11th of October, 2022. Remember to hit follow and don't forget to check out our new podcast, How Do They Afford That?, featuring Tanner Campbell, the founder of Sugar Mama TV, all about making your money work a little bit harder for you. There is a new episode out tomorrow, so hit subscribe or follow today so you get it the moment it drops tomorrow morning. I'm Michael Thompson, and that was The Fast Five by Fear and Greed. Have a great day.